Snap is trading at $5.56. That's near its lowest price in years. Even though the company just posted its first ever GAAP profit, even though free cash flow tripled year over year, even though there's a subscription business inside the stock doing $1 billion annualized, growing at 87%, the stock is priced like the company is broken. The fundamentals are saying something completely different. Here's the question nobody is actually asking. Everyone's debating whether Snap Spectacles will work, but that's the wrong question. The real question is, can Snap become profitable even if Spectacles fail completely? Because if the answer is yes, and I'm going to show you why, the data says yes, then Spectacles working is just free upside on a stock that's already cheap. Two questions. Most people are only asking one of them. But before I get to either answer, there's a number that quietly disappeared from Snap's earnings in Q4 2025. Companies only bury numbers that are getting worse. I'll show you exactly what it was, and then I'll tell you why I'd still put this stock on my watch list anyway. Let's get into it. Quick context before the numbers, because most people get Snap wrong from the very first sentence. Snap is not a social media company trying to fight Instagram. That's not what this company is. The CEO, Evan Spiegel, literally said this. The camera is the flashing cursor of the smartphone era. Think about what the cursor was on a desktop computer. It was your entry point to everything. Every click, every action, every file, it all started with the cursor. Snap's thesis is that the camera is that same entry point for the mobile era, and eventually for the AR era. Every product Snap has ever built, AR lenses, spectacles, Snapchat Plus, is built around that one idea. Spectacles aren't a side project. In Snap's vision, they're what the whole company has been building toward for a decade. Now here's the insight that actually changes how you read this stock. Snap is two businesses inside one ticker right now. Business one is the ad platform. It's fighting against Meta and TikTok, and it's got real structural disadvantages in that fight. Business two is a subscription company. 25 million paying users, $1 billion annualized, growing at 87% year over year. The market is pricing Business one like it's the whole story. Business 2 doesn't get credit yet, so let's answer question 1. Can Snap become profitable without spectacles? Q4 2025. Snap posted $45 million in GAAP net income, first time in the company's history. Q1 2026. Adjusted EBITDA came in at $233 million. That's double year over year, and it beat what analysts expected by 8.6%. Free cash flow in Q1 2026, $286 million. Trailing 12-month free cash flow, $662 million. That number tripled year over year. But here's the number that isn't in those results yet. And this is the most important thing I'm going to say in this whole video. In Q1 2026, Snap cut 16% of its workforce, roughly 1,000 jobs. That's $500 million in annualized cost savings. None of it has hit the income statement yet. That money lands in the second half of 2026. The core business is posting its first GAAP profits with the biggest cost cuts not even counted yet. If you trust that number, sustained profitability is calculable, not theoretical. Gross margins are sitting at 57%, and the company is targeting 60% plus. S&P upgraded Snap's credit rating from B plus to BB minus in Q1 2026. The first upgrade in years, in Snapchat Plus, the paid subscription tier. It started 2024 with 7 million subscribers, ended the year with 14 million. It's now at 25 million, $1 billion annualized, growing at 87%. That is the subscription business the market is completely ignoring right now. Now let's hit question 2. What are spectacles, and could they actually work? The 5th generation spectacles run Snap OS, a custom operating system, controlled entirely by hand gestures and voice. No physical controllers, no phone required. It's a lightweight AR computer you wear on your face. Developer pricing right now is $49.50 per month. The consumer launch is coming later in 2026. Snap is presenting more consumer details at the Augmented World Expo on June 16th, 1 week from now. But here's what almost everyone misses about spectacles. This is the most important part of the entire bull case. 450,000 developers have already built 5 million AR lenses using Snap's Lens Studio. Those lenses are confirmed compatible with consumer spectacles. Right now, the Snapchat community uses AR lenses 8 billion times every single day. Think about what Apple did before launching the iPhone. They built the App Store first. They let developers create software first. When the hardware shipped, it launched into a library that already existed. That's exactly what Snap has done. You're not buying hardware and waiting for software to be created. The software ecosystem was built first, over years, by 450,000 developers. That is different from every failed AR headset that launched into an empty app store. Snap also spun Spectacles out as its own separate business unit, Specs Inc., in January 2026. That's not a company hedging on hardware. That's a company making a structural commitment to it. If the software ecosystem is the bet, it's already been placed. Okay, before I tell you why I still lean bullish, let me show you the things that genuinely concern me. Because this isn't a clean story, and I don't do hype. Imagine you own a coffee shop. You have 100 regulars who spend $10 each visit, 400 casual visitors who spend $1 each. You cut the staff that attract the regulars. Total customer count goes up, revenue goes down. That's what's happening with Snap's user base right now. North America daily active users dropped 5% year over year. That's 6 million high value users gone. Rest of world users went up. The global number looks fine. But North American average revenue per user is $10.88. Rest of world average revenue per user is $1.24. One North American user is worth 9 rest of world users to Snap's ad business. Adding cheap users while losing expensive ones looks like growth on the headline. It's actually dilution. 28% more advertisers on the platform. Ad revenue only grew 5%. That is not a growth story. That's a platform losing pricing power. Now here's the number that disappeared. In Q1 2024, Snap prominently reported that total time spent watching stories from Snapstars grew more than 55% year over year in North America. They led with this number. It was a proof point they were proud of. By Q4 2025, that metric was completely gone from the investor letter, no mention, no explanation. They replaced it with average daily messages sent up 5% and bidirectional communicators up 5%. That's the switch from an engagement metric to a utility metric. Companies only bury numbers that are getting worse. Content consumption time appears to be weakening, and they stopped volunteering that data. One more thing. In the Q1 2026 earnings call, an analyst asked directly, how does Snap plan to deploy additional GPU compute to improve ad relevance? That's the core mechanism of how they make money. The earnings call ended. The question was never answered. In a world where Meta is deploying billions in AI infrastructure to sharpen ad targeting, Snap's silence on that specific question is a tell. So how would I think about entering this position? I don't have a position in Snap right now. Capital is committed elsewhere. But if it were available, here's exactly what I'd run. A cash secured put at the $5 strike, about 35 days to expiration. That target's roughly 0.30 delta, just out of the money. If it expires worthless, I keep the premium. If I get assigned, I own Snap at $5 minus whatever I collected. Cost basis under 5. Estimated premium in this environment, 35 to 45 cents per contract. That's roughly 25 to 30% annualized yield on the $500 at risk per contract. One honest caveat, 4 rank on Snap right now is 24.3%. That's below my standard 30% threshold for selling premium. Normally I'd wait for 4 to expand before putting this trade on. But at 565 with the 52-week low already documented at 381, the risk reward changes the calculation. The floor has been tested. This isn't about chasing premium. It's about getting a discounted entry on a business I think the market has mispriced. And one thing that makes this clean, next earnings is August 4th, 2026. A 35-day position open this week expires mid-July, completely clear of earnings risk. Here's where I land after all of this research. Question 1. Can Snap become profitable without Spectacles? The data says yes. First GAAP profit already posted. $500 million in cost savings not yet in the numbers. Subscription business at $1 billion annualized. S&P credit upgrade. Free cash flow tripling. The math is almost there, and the biggest catalyst hasn't even hit the income statement yet. Question 2. Can Spectacles actually work? Genuinely unknown. The consumer launch hasn't happened, but you're not buying hardware waiting for software to be written. 450,000 developers already built it. If consumer adoption follows, that's upside the stock isn't pricing at all. The market is priced like both bets are already lost. If only the core business bet wins and specs go to zero, the stock is still mispriced at 565. If specs gain even modest traction, you're looking at a completely different multiple from here. The bear case is real, the vanishing time spent metric matters. The unanswered GPU question is a yellow flag. North American user erosion is a genuine structural problem. None of that gets dismissed. But here's how I think about the setup. The 52-week low is 381. That floor has been tested and held. The downside is bounded. The upside has multiple catalysts stacking, 500 million in cost savings, hitting in the second half of this year, the Augmented World Expo this month, consumer spectacles launch later in 2026. This is exactly the kind of setup I want to be ready for, not chasing after the fact when it's already moved. Snap goes on the watch list today. That's the research. That's the framework. You make the call. If this breakdown was useful, hit subscribe. I do this every week on stocks I'm watching, whether I own them or not.